Hello, and welcome to the Fintech Times podcast, focused on discussing the latest fintech topics and trends from around the world. Established in 2016, the Fintech Times is a global multimedia news outlet centered around the world's first leading fintech newspaper. We report all the latest and brightest ideas from the fintech world.
Hello, and welcome today to our podcast on payment service providers, or PSPs. Established in 2016, the Fintech Times is a global multimedia news outlet centered around the world's first leading fintech newspaper. We report on the latest and brightest ideas from the fintech world as an authoritative and trusted voice focused on high-quality content and distributed to a global network. Chronicling the latest developments in cutting-edge financial technologies, including paytech, regtech, banking transformation, open banking, blockchain, and wealth tech, just to name a few. Today's focus is, of course, going to be on paytech. And first, I want to give a warm welcome to all our listeners as we really explore an interesting segment of this paytech sphere, the evolution of the PSP market. With the pandemic having catalyzed every digital aspect of not only the fintech space, but the world in general, the race to provide the ultimate customer payment experience has never been greater. While new entrants in the market have a greater ability to try out new payment methods, incumbents have the ability of rolling them out at a much faster pace, begging the question, who's going to win? With that in mind, I'm Francis Bignell, a journalist at the Fintech Times, and today I'm joined by David White, Executive Vice President of Payments at Lexis Nexis Risk Solutions, to discuss what hurdles PSPs are facing in today's payment environment. So,
thanks for being here today, David. It's great to have you on the podcast. Would you mind giving us a brief rundown of Lexis Nexis and what you do at the company?
Sure. First of all, thanks for having me. It's a pleasure to be here. Lexis Nexis Risk Solutions, we offer a wide portfolio of products, principally aimed at financial services, but slightly broader than that. I'll really talk about just my part of it, because otherwise we'll go through a lot of things that maybe aren't relevant to the audience here. So I principally look after two parts of the business: financial crime and compliance, and payments efficiency. And broadly, that is a bunch of solutions that help organizations to remain compliant. We particularly focus around payment, sanction screening, etc. And then the other side of it is a suite of products around payments efficiency. And just so the audience is aware, some of the brands you would hear other than Lexis Nexis Risk Solutions are Banker's Almanac, which is obviously our big payments efficiency brand. And for those who've been in the banking industry, it's a 175-year-old brand that's been helping banks for quite a while. And on the screening side, FurcoSoft is our big screening brand, which a number of the compliance folks would be aware of. So yeah, I run those two parts of the portfolio from the product side, making sure that we're hopefully delivering value to all of our customers.
Awesome. Well, it's great to have you here today, and I think this is really something a topic that you're going to enjoy talking about, because we're talking about payment service provider markets today, or PSP markets, and sort of like how they've evolved and how they've sort of consolidated in sort of the expanding digital world, I suppose, especially after the pandemic. Everything as we know it has sort of been catalyzed. And I think you'd be hard-pressed to find a marketplace that hasn't been heavily impacted, as I'm sure you'd agree. I think whichever way you look at it, there's every single payment market, every single financial market has rapidly changed from 5 years ago. So with that in mind, could you provide some insights into where the payment service provider marketplace is seeing consolidation and what this means for remaining players?
Sure. And I think, to your point, this has been an incredible period of change, right? And I think, inevitably crisis forces change and drives innovation. And I think we've really, seen that. We've been front and center to see how that's played out in the massive digitalization of payments over the last couple of years. Obviously, cash sort of going through, was very persistent prior to the pandemic and seemed to be sort of set for a slow and gradual decline rather than anything radical, really being dramatically displaced as the primary method of payment in some of the markets that maybe we thought would take a bit longer. So absolutely agree, fascinating time to be in the market. A lot of change, a lot of opportunity, but more risk comes with it. And we saw in the pandemic a number of those risk aspects coming front and center, whether it be fraud or the compliance aspects of it. So I think with regards to sort of some general observations on what's happening, sort of touching on some of the consolidation stuff. I think first of all, kind of a consolidation point, but one that I personally find very interesting. It's just to see what's happened maybe over the last year around IPOs actually, and what that means for where this market's going. So I think we saw, Wise go last year, we saw Paytm go last year, big valuations, and I think that is a real key indicator of two trends I see in the market. One, just the market's acknowledgement and awareness of how critical these, what we could call fintechs, although I'm not sure it's necessarily the right word, because I think that's maybe a too broad a definition. But certainly those fintechs playing out and getting very high valuations. And the second thing is that the market is inevitably sort of consolidating into fewer players. And I think there are a number of reasons behind that. The one that sort of springs to mind for me is the fact that I think it's now a lot more expensive to enter the market than it used to be. I think if we go back maybe 5-10 years ago, some of the overheads to enter the market were probably a lot lower. We've certainly seen a significant trend into what is required on the fraud side, what is required on the compliance side. And I also think, something we're seeing as an emerging consideration that the larger players are far better served on is an ESG consideration, that, these are not, some of the risks that the PSPs take are not just the compliance and fraud aspects, they're now just reputational issues that, doing business in certain jurisdictions or with certain individuals or certain categories now has an inherent reputational risk that a lot of the players are not willing to take on. So we certainly see that probably the cost of entering has become higher, and also the benefits of scale make some of those overheads a lot easier to deal with. I think the other key trend we are seeing is the value add side. And I think what we're seeing is that, I think Stripe are a good example of this. They're really passionate about understanding that customer problem and providing the full range of services to deliver to that customer. And I think what that allows them to do is to move out of some of the traditional issues around this being very much a margin game and arguably historically a race to the bottom, to being much more of a customer focused approach, a wider range of service. And I think that, that certainly is, again, playing towards consolidation, because clearly to offer a wider range of services, the scale of a business like Stripe makes a big difference, both from a point of view of balance sheet, but also just that, exposure to different parts of the market and better understanding what a full service should look like. So they're definitely key things. I mean, the other thing that I think is really fascinating at the moment going on, I think will drive both consolidation, but also some real innovation, is just the need to support omni-channel. I think I spend a lot of time in the APAC region. I find it fascinating to see some of the real innovation that's going on in that region, but really early indicators of what we're probably going to see in both the US and Europe around kind of that ability to seamlessly operate across multiple channels and do so in a way that, from a customer point of view and from a merchant point of view, is frictionless. And I think that really, for me, is, from a feature point of view, where the real battlefront now is going to be, as we see more and more channel options, a real sort of focus on the value add services, and both from a merchant and a customer point of view, reaching that frictionless point without sacrificing on the fraud and compliance side.
So you've mentioned there, David, how some of the markets are differing in looking at regions, I suppose. How different is the APAC region? I know you said you've specialized in it, and you said how it's going to impact sort of the European and the North American markets. But how are the roles of financial institutions in APAC differing to other PSP market consolidators?
Yeah, and I think it is. I mean, for me, being a product person, I really like to get out into the market and sort of, I think the slightly difficult expression is eat your own dog food, but certainly get out and understand what the products are like to use and the various features. And I think a couple of things that I find interesting in APAC. I mean, first of all, as as a consumer, as somebody buying something, the choices are pretty extensive. And also, I mean, the obvious one is we've all seen the QR code aspects, both, in China, but also across the APAC region, where that, from a frictionless point of view, if you've got a wallet and a camera on your phone, you can easily go, around in certainly in China, mainland China, but also Singapore, Indonesia, etc. And you can buy on QR codes, very frictionless. And typically, you see this, that the primary financial relationship is actually with those sort of mega apps such as WeChat or Grab or GoPay. And I think that's a really interesting one for me, how if you look at some of those markets and, for example, Indonesia, where there's a large unbanked population, clearly the major backbones such as Visa and MasterCard never really took a hold there. They jumped that whole generation of technology to move straight into a kind of mega app such as GoPay or GoCheck, which has got GoPay, where it truly is a frictionless experience to pay. And the pay aspect of the customer journey is highly integrated in a way that we don't really see at the moment very much. I mean, there are a few exceptions in Europe and the US. I think that in the Europe and the US, because the payment systems kind of evolved separately to the internet and the web and subsequently apps, although clearly Apple Pay is one exception to that there is more friction in the process. So I think that's interesting. Also, that the primary financial relationship tends to be with the wallets. Again, represents a very interesting differentiator to the European and US market, where clearly even today, with the rise of quite a lot of investment and quite a lot of interesting fintechs, I would say the majority of consumers still have their primary financial relationship with a bank, and maybe some with a neobank or challenger bank. But the majority of the organizations they have that relationship with look like traditional banks, but in one way or another. So I think that's definitely different. I mean, the thing I love as a consumer, and I've spoken to a number of merchants in this space as well, is just the frictionless aspect of it. And that's both, from a merchant, that ability to get paid very quickly. I was actually, if you think about the sort of micro merchant gig economy style, you've got literally cab drivers in places like Indonesia that will be paid the same day on a transaction, on the transactions from that day. And the process for both the consumer and in effect, in that case, the micro merchant almost, is very seamless because everything's happening within one ecosystem. And as such, the payment out is pretty straightforward. And certainly from a consumer, I was in a cab in Jakarta about a month ago, and the latest thing is as soon as you get in the cab, you actually get a request on the app. You confirm that you're in the cab. It produces I think a six-digit code, and you give that to the cab driver, and that completes the transaction. And again, we're even getting away from, QR codes are now seen as inconvenient. So we've gone to the next stage of that. And I think that's very interesting. And there is a lot of experimentation. Not all of it works, not all of it sticks, but I think it does represent some clear indications of where the market might go, albeit clearly in the US and European market, there's big infrastructure players already doing that. But I mean, we can see with, I think, Visa's acquisition recently of Tink that, the open banking aspects is maybe one way for the more sort of traditional markets such as the Europe and the US to start to take advantage of some of the functionality that those markets that didn't have that infrastructure are now to adopt a lot quicker.
Yeah, absolutely. And I think it's interesting that you spoke about QR codes there, and sort of how they're already being almost seen as like an ancient bit of technology, despite the fact that, they've only just come about in the last couple of years anyway, or at least risen to popularity. And I was just going to sort of mention that, but I mean, as you sort of said, they are already sort of on their way out. They've already been overtaken. And then you sort of mentioned as well how especially in the US and in Europe, you see these big players who are sort of consolidating the marketplace and using technology. it must surely it becomes very crowded, and it must be quite difficult for new financial institutions or new entrances being made into the space to really stick. And I suppose when you have sort of this traditional outlook, like as you said, many businesses, many consumers in the US and Europe are still associating themselves with traditional banks, and as you said, on occasion neobanks. How are these new entrances really going to make an impact and stick and sort of overtake this? Because like you said, in sort of other regions it's possible, but what are some of the challenges that they're facing?
Yeah, and I think some of those other regions also benefit from, it's very active regulation to promote this kind of competition, and that has happened in Europe. And I think the Open Banking Initiative, particularly, is one way where the regulators and governments can encourage innovation. I think I sort of approach this problem in two ways. First of all, and I think actually Stripe have done a great job on this. I think, how you differentiate yourself is really be obsessed with the customer problem. And I think that ability to really focus on the customer with passion, really trying to understand what the friction points are, is the basis for any form of competition in this market, because the barrier to entry is now very high. The minimum standards, just on performance and everything else, are extremely high. So I think that is really the only place to differentiate, to really try and understand, probably in quite niche markets where there is pain still in the process, because there certainly is. And I think, really focus on the customer with passion. I think the other side of it is really about embracing some of the opportunities that are out there. And I think, open banking is a good example of that. I think we're really only starting to see in the industry, and certainly as consumers, some of the benefits of that, I guess, the ability for open banking to break the hold that traditional financial institutions have had over those primary relationships. And I think that is absolutely necessary for us to drive the innovation forward. And we can see that playing out in APAC, because both maybe not some of the massive incumbents were in place, but also, proactive regulation or certainly regulation that allow this kind of innovation, means that the diversity of solutions out that I see are much wider. But also from a consumer point of view, you have more choice, and you have that ability to really, vote with your feet. You don't have to have a primary financial relationship with a traditional bank. Now, I think some of the traditional banks are doing some really interesting work in here, but having that competitive push, I think, is really essential. So certainly, if I were to think about entering the market at the moment, I'd certainly be looking at, as a PSP, what are the opportunities around open banking? Really, where can you leverage those technologies to make a difference, and most of all, to sort of make a difference to a customer problem you're passionate about and really understand, because nobody's going to enter this market on cost at the moment and be able to differentiate themselves. It's just not possible.
Yeah, absolutely. And sort of just delving into that final point a little bit more, what are some things that businesses need to do to prepare themselves, PSPs as well? What do they need to really do to prepare themselves to I guess succeed, really? Because as you said, it's such a competitive environment. What do they need to do?
I think the first thing is to understand that the environment we're going into now does have inherently probably more overhead than it did. And I mentioned this at the top of the conversation, to say, if we look at the fraud aspects, the compliance aspects, and the sort of wider ESG aspects, you've really got to go in understanding that well. And I was having a conversation just the other day where, I won't name the client, but one of the industry players said, if you're not absolutely top of your game around those three at this point, then succeeding in the market is virtually impossible. It's now that base layer of saying, if you haven't got those aspects nailed down, if you're really not on top of those aspects, then they hold such a sway on both your ability to be competitive, but more importantly, the cost aspects of running a business, that you're not going to succeed unless you really have those down. And I think if you go into that, if you go into the market with real awareness of what it would take to meet those standards and to be competitive with those standards, then I think that helps. Then it's really about where can you differentiate yourself based on value to the customer. And I think, if we look at the broader part of the market, I think that's difficult. They're very well served. But I mean, we can see things, I mentioned it earlier, an example of the gig economy, but that aspect of the market is still difficult. It's difficult for all players, both at the regulatory and onboarding side is quite difficult. But just the managing of that many micropayments, etc., becomes, it's still logistically and performance-wise, it's not an area that's really been, I would say, solved compared to a more standard scenario we can see for regular, bricks and mortar merchant, for example, dealing with one of the big players. So I do think there is opportunity, but definitely to go in this market without a fully resolved approach to fraud, compliance, and ESG, I think it guarantees failure. And also not to really understand that customer problem you're trying to solve. I think, again, you're never going to compete on price, so you've got to compete on features and differentiate yourself in the value you add to the customer.
Absolutely. I think now more than ever, we're sort of in a time where the customer can really dictate the way things go. I mean, historically, you had these traditional incumbents who almost had a monopoly on a marketplace, and they could sort of decide, all right, this is how things are going to go. This is how much you're going to pay. These are the regulations. But with sort of the evolving times, now it's really, the emphasis is back on the customer, as I'm sure you'd agree. And I mean, from a customer point of view, I think that's wonderful. I mean, we're the ones back in control. So, I mean, it's a fun way to look at it like that. But from a business standpoint, as you sort of mentioned, there are certain aspects that you need to consider, sort of regulation, ESG compliance, cost. And I suppose there's not always going to be one PSP in particular that's going to have a one-size-fits-all approach. And so how are corporates meant to decide and incorporate a PSP that works with their payment operations?
I mean, I'd absolutely agree. I don't think there's one size fits all. I mean, if you think about, the challenge for something like group treasury is if you're running a multinational business, particularly if, you have significant e-commerce, etc., involved in that, it would be difficult to imagine a single provider really being able to give you the best of breed across the board. And I think this is both great in some respects, going to your point of the consumer gets to choose. In this case, group treasury really can shop around for the right solution for the different market aspects, but it does introduce a lot of complexity. And I think we're very much seeing this for the corporates, big push on treasury management systems. I think, a number of our clients are quite big corporates, and I look at them and they look like mini banks now. Their group treasury departments really operate like a bank would. And I think what that's meaning is they are making some very strategic choices, but also tactical on the region of saying, well, for a specific region, based on both their business operations, but some of the challenges they see and some of the features they require, they will choose a best in breed for that solution. And again, I think that choice is great. I think it does drive out innovation in the marketplace. I think it can, if we really think about omni-channel, omni-channel 5 years ago meant something completely different to what it means today. I mean, we're seeing obviously the rise of crypto solutions across the board. We're seeing the emergence of maybe state-based coins. I think omni-channel in 5 years' time is really going to be, kind of a smorgasbord of different approaches you can take to complete a payment. Everything from account to account, traditional backbones and networks, through to probably exotic stuff that we can't really imagine now, maybe trading of NFTs or something, who knows. But I think that is both the opportunity for the market. I think the PSPs are far better positioned to incorporate those channels compared to the traditional financial institutions. I think the benefit of being, in effect, monoline businesses allows them to adopt those variations in a way that it's very difficult for the traditional financial institutions. So that raises some good opportunity. And I certainly think from a corporate's point of view, yeah, they want to offer their customers everything they need to pay, right? I mean, you don't want to make payment type the barrier to completing a transaction. So their ability to offer the customer the choices that, you know, the customers clearly, or the consumers are clearly driving for, while having the support within the network to do so efficiently, again, I think it's certainly an opportunity. Back to my earlier point, though, I think with all of this comes more complexity, and I think, you know, that's one of, when we speak to our clients, you know, spend a lot of time out in the market, I think this is probably coming up more, you know, is really ramping up, that the complexity, particularly for group treasury, particularly for multinationals running big e-coms, is a big overhead. And I think, again, that's an opportunity for people to drive simplicity and efficiency through that process. And we're seeing some players, you know, trying, but I think, you know, inevitably we're in a fast-paced market with demanding, you know, consumers and players in it. And I think that, you know, we're not maybe quite there yet for solving the complexity issue.
Definitely. And I think one of the points that you said earlier on, which kind of really stuck out to me, is this idea that PSPs are more, I suppose, readily available to adapting to new changes, sort of, as you said, sort of crypto adoption, like even looking as far as NFT trading and stuff like that. And I think I wanted to sort of get your views on this as well. Is it because there's almost less to lose than compared to a traditional institution that, say, has all this history, has such a big consumer base? Is the sort of the smaller PSP, because there is less sort of, I suppose, loyalty on the line, that they're able to explore more with different options?
Yeah, and I think that, I mean, I would certainly agree there, that I think they are, you know, observationally, we can see they're probably in a better position to respond to these changes. And I think there's two factors to that. One, from an opportunity point of view, particularly if you're a monoline business, then the opportunity is probably greater. I think the problem for the financial institutions, particularly larger ones, is they have such diversified businesses now that cover such a wide range of clients that any one opportunity kind of gets lost to some of the noise anyway. I think the other side of it, and probably the one that has more of a bearing, is just the friction that goes with that change. I think, you know, if you look at the large financial institutions with these very complex central systems, a lot of legacy technology, their ability to rapidly adopt, you know, new channels, new payment types, etc., is inherently limited by just the amount of friction their legacy systems present. Even if they can see the opportunity, they'd have to get beyond the friction in their systems. And I think this is a real opportunity for the PSPs, because by and large, they don't have that legacy sort of technology debt that the more traditional organizations have. And I think they're better able then to see the opportunities that this might play out. Again, I think, you know, that there are some risks involved in this. The more channels you offer, the more complexity, the more difficult it is to, you know, often have compliance around that and consistency around onboarding, you know, for different channels, etc. But they're in a much better position to try and solve those issues than, you know, a bank that's having to deal with, you know, a significant legacy environment that would require, you know, probably years of development to incorporate some of these emerging payment types.
Absolutely. And I think you sort of hit the nail on the head, really. There's this idea that there is just such a long process in making this change, and it's not a process that can happen overnight, as much as some companies might want it to be. And if we're going back to sort of, as you mentioned, this idea of, you know, digital currencies, digital assets that are becoming the new norms for payments, one type of this digital currency that we're seeing are CBDCs, central bank digital currencies. And I suppose I wanted to sort of just gauge your views on how different are these in sort of their adoption compared to, say, your Bitcoins of the world, say your NFTs. Like how different is a CBDC in terms of, I suppose, a priority for a PSP and how it's incorporated?
I mean, I think, the truthful answer is none of us really know for sure at this point. So it's a bit of, crystal ball gazing maybe to see how this is going to play out. But I think some of the things we can be fairly confident is, I think most players in the industry find the underlying technologies that sit behind, all of these that fundamentally, if we want to put a category on blockchain technologies, fascinating. And that sort of ledger aspect of it, I think, most of the sort of more technology focused people in the industry do, strongly argue that it is a superior approach than what we've done historically. I guess the problem that we've had in adoption is the early adopters of these technologies have come with some volatility, maybe some bad press and all the rest of it. And as such, the mainstream adoption has been subject to, some false starts, some issues around regulation, some inconsistencies, etc. I think what's interesting about, the kind of central bank aspect of it is immediately we remove those aspects that have made, for example, even something now as mainstream as taking Bitcoin as a payment type, that still comes with some reputational aspects. There's the inherent volatility issues, and then there's some of the technical things, and particularly once you get into things like, the anti-money laundering side of it, there's compliance issues as well. I think as soon as we move away from that to, what are fundamentally state-based support of the technology in the form of those coins, it means we can get back to looking at the core benefits. And the core benefits are around the fact that, obviously from a ledger point of view, there is that transparency, there is more accountability involved in that. Every transaction is recorded, things that we've really struggled in certain aspects of the payments world for some time, where cash still being obviously one of the obvious ones. So I certainly think it will be easier for mainstream players to adopt those technologies once they're out there and being supported. And again, from the PSP point of view, I think they're in a far better position to adopt them than the banks, because the traditional financial institutions haven't had to adopt many new payment types over their, in many cases, centuries of doing business. So as such, I can see this as being, an interesting opportunity for the PSPs and for the wider fintech community, I would say, to really look at, as those emerge as a real option, that ability to incorporate, to really create the ecosystem around them, and to do so with more confidence than maybe we've had with taking some of the kind of first, second generation, whatever, based off this blockchain technology. So yeah, I think it's an interesting opportunity. I think to a certain extent, we're all sitting here and wait and see how it plays out, though. And I think, certainly being a bit of a geek in this area, I think there's some potentially very exciting stuff. But I thought that probably 10 years ago as well. I was looking at Bitcoin, so let's wait and see. But I certainly think probably it's stacked more in the favor of wider adoption and certainly from a technology point of view, some exciting stuff coming out.
I couldn't agree more. I think this is really an exciting time in the space. I think probably in the last 10 years, I'd say as well. It's just, it doesn't seem to be slowing down, this idea of, technological developments. And as you said, it really is an exciting time, and it is very much so sort of crystal ball gazing at the moment, because there is no way to know what's going to take at the end of the day. It really is just throwing everything out there and seeing, because as we've sort of discussed already on this podcast, that it is such a saturated market already that it really is going to take something incredibly, for lack of a better word, special, I suppose, to really take it by storm. And I do believe that, strong blockchain technology, if it gets the right adoption, it is going to be that sort of special thing. That sort of leads on nicely to the next point, though, which is sort of discussing, as you said, we've looked at some of the good opportunities that are there. But of course, with opportunities, there are also certain risks involved and certain concerns. So I wanted to sort of gauge your views on what are some of the biggest concerns in regards to CBDCs and PSPs, but also more general with the PSP market. What are some macroeconomic issues like rising interest rates, global economic slowdown, those sort of things that are that are really going to impact it?
Yeah, I mean, let's take the sort of global economic slowdown. I think one of the dangers of the market at the moment is the valuations traditionally, or sort of recently, sorry, have been very high around players in the space. There's been obviously a lot of venture funding going in based on some historical performance in the market that may be more difficult to play through as we go into a slowdown. I think, I was looking at some figures, and I could be slightly off on these numbers, but of all of the sort of fintech investment, I think now around about 25% of all of that is going into fintechs that play in the payment space. And I think by and large, the valuations have been very high. So I think there is an underlying risk for certainly PSPs, but more generally, if I widen that out to anybody playing in the fintech market in the payment space, that those valuations come with a certain expectation of performance, which might be more difficult to realize in a market that's slowing down. I think interest rates inevitably, I mean, just because the business model make it slightly more expensive to do business potentially, and again, benefit people with scale rather than not. So I think that's an inherent risk. The one I'm probably closest to from a risk point of view is just the impact of the Russian sanctions, the impact of the Ukraine conflict on quite a broad range of both sort of obviously regulatory, so compliance to the sanctions, but also that wider sort of reputational risk. And I think that is definitely added cost for everybody to do business in the market. It's added risk, and that again probably favors the larger players being able to absorb that quickly and be able to continue to operate. I mean, if we just saw the speed by which Visa and MasterCard pulled out the Russian market, that's very difficult for the smaller players to incorporate into their business model at that kind of mass, reduction of the marketplace in a very short period of time. So I think it is, it's a different market we're going into. I think there's certainly going to be a period of time where interest rates are probably going to take a while to, go through a cycle where they return to levels we've been used to. And I mean, I've certainly read some stuff that says there's an argument they probably won't go down to the level we've been used to historically, which again will affect the underlying dynamics of the business model, which I'd say probably unfortunately favors the larger players rather than the emerging players. It'd be interesting to see what the venture market does on continuing to support this space. I still think there's a huge amount of opportunity. And for the things we talked about before, that the level of, or the speed of change is not slowing down. It really isn't. And I think, I'm constantly seeing things coming up. So I still think there's great opportunity in there, but clearly it's going to be more difficult to sustain a level of growth if we're in, an economic downturn.
I definitely think you sort of as picked up on some interesting points there of this idea that, the opportunity is always going to be there. And it's not like, it doesn't matter how saturated the market really is and how many challenges sort of arise, there is always going to be this overriding opportunity, which is, I think, always in a sort of a bizarre way going to favor the PSPs. It's going to favor sort of those challengers who are challenging the status quo. And sort of, as we round out the podcast, I wanted to sort of just get your views on what are some outcomes of all of this evolution and result in emerging challenges into the bottom line of the PSP marketplace's performance?
Well, I think certainly, if we look at the players that, or sort of the attributes of players we think we will do well over the next, 3 to 5 years, I think the ones that are embracing some of the technology, particularly around, if we look at, Europe, particularly, let's say some of the open banking opportunities, I think, are probably mature here and can be exploited. I think that will certainly enable the PSPs to differentiate. And, to a point I think I've made a few times now, we think that differentiation is absolutely key based on features that really solve some of the pain points that operate in this market. Yeah, a race to the bottom on cost is not going to work for anybody, and I think very few of the emerging players would be able to compete on that. But to the point we've just made around opportunity, still plenty of pain. If you talk to merchants, even from a consumer point of view, there's still lots of friction in the process, lots of things that are deemed to be unsatisfactory. So I do think there's that opportunity there. I think that absolute razor sharp focus on the customer and really trying to identify where that pain is and push something out that's going to address that is absolutely key. I think making sure the house is in order around those core sort of fraud compliance and the wider ESG risks, absolutely essential. But I think with all of that, I'm still very positive about the market. I still think that we've not seen who's going to win. Certainly some players that have done very well, but I don't think if we just look at the IPOs last year, Wise, Paytm, where were they 10 years ago? They didn't exist. They've come out of nowhere. They've really made a difference. They've absolutely solved a pain point in the market, and the valuations in the IPOs play out to that. So I certainly think we haven't seen who the winners are going to be. I think there's a lot of opportunity, but there are some things you really got to focus on and make sure that that passion around the customer problem and really adding value is your differentiating point, and leverage the technology to do that.
Absolutely. And I guess to your point just there is this idea, you spoke about Wise sort of 10 years ago, nobody knew who that, they just weren't a thing. And I think if you look at it 10 years ago, some of the customer pain points that we had then have been definitely addressed now. And sort of the customer pain points that we have now in 10 years might be addressed as well. Then there's obviously going to be new ones. And it's that constant evolving sort of environment, I think, that is always going to favor PSPs and always going to favor the challengers. And like you said, there's always going to be those larger institutions who are more established and have an ability to adopt these technologies and new payment methods, I suppose. But regardless, I think there's always going to be just this underlying sort of underdog almost mentality that is always going to help PSPs and just emerging financial institutions in an evolving pain point environment.
I think it's the tremendously exciting thing about this market. I think it's moving fast in a way that it's never done before. I think the consumer's really benefiting from that, which is great. And I think that does, it does raise opportunities for people that can be nimble. Now, I think we can probably say that the PSPs are probably better positioned to be nimble. I think it's an interesting challenge for the more established financial institutions if they can match the pace, because if they can, I think there's a lot of opportunity for them as well. But for me, as a sort of practitioner in the space for some time and somebody that really geeks out on some of the technologies, it's fascinating. There's never been a more vibrant time, and that's it's good to be involved in it at this stage.
Well, here's to hoping that the future remains as exciting and that we continue to see new technologies and new faces in the space that are going to continue to address customer pain points and differentiate in the market, creating more options for institutions and users. But anyway, David, I think this has been a really, really interesting conversation. I've thoroughly enjoyed it, and I think our listeners would probably agree that it's been thoroughly insightful as well. So thank you ever so much for coming in today and sitting down to talk to me. It's been a great conversation.
No, I really appreciate the opportunity. It's been a really great chat, and I hope everybody enjoyed it.
Fingers crossed the future is as optimistic as we say it, as we're predicting it's going to be.
Thank you for listening to the Fintech Times podcast. We hope you enjoyed the discussion as much as we did. Don't forget to check us out at thefintechtimes.com and subscribe to our monthly publication to keep up to date with all the latest fintech news.